For more on this, I do want to bring in our first guest, David Beckworth. He's a senior research fellow at the Mercatus Center at George Mason University, as well as a former international economist at the U.S. Treasury. Thank you so much for joining on a very busy morning. And let's start with tariffs because they are front and center. What does this mean for the economy?
Well, thank you for having me on. What it means for the economy depends in part on what President Trump will do. Will he persist with these tariffs? Will he change them as he has? If he persists, this is like a big negative supply shock. And there are a number of pieces in play already that could mean some pretty serious paths for the future. So we already have weak inflation expectations. Households are already suspicious. We see that they are creeping up. They're worried. We also have raging budget deficits. And then on top of that, we have these price shocks from tariffs. All these things could lead to higher inflation and could set the stage for something kind of like a stagflationary environment. Now, bond markets are only pricing that in for this year, but the following year, they are predicting disinflation. So at a minimum, we would see a negative supply shock, potentially weaker growth. But all things that we would not want in time like this.
David, are you surprised that the jobs numbers this morning for the month of March are as strong as they are? 228,000 jobs added last month.
Absolutely. It's a nice silver lining to everything that's going on right now, for sure. It's great to have some good news. But, you know, that is like looking in the rearview mirror, right? We're seeing what's behind us. Looking ahead is what's really concerning. That's why the markets are down, even though we have this great jobs report. And again, this is going to be a self-inflicted policy error. I dare say one of the greatest policy mistakes in recent U.S. economic history. And we just don't know. That the key part is uncertainty. The uncertainty drives investment spending, which is down. It also affects how willing we are as consumers to spend and to buy. So there's a lot of questions going forward.
Interesting. Now, of course, in the wake of this employment report, I think there are questions as to the tens of thousands, at least, if not hundreds of thousands of federal workers who have lost their jobs. David, any insight as to why we are not seeing those numbers show up in the non-farm payroll reports of late?
Well, probably because it's a small part of a much larger labor market. There's thousands of jobs that are added and taken away every month, and there's also seasonal factors added. So probably it's just a blip on the broader radar screen of the job market.
In terms of this trade war policy, certainly we've seen it escalate, David, and I know that our first topic here really did address that, but in terms of what we anticipate going forward, is there any way to quantify the impact that you would anticipate that this has on the economy and corporate America?
I wish I could. It's just that the uncertainty is so large around this, the uncertainty bands, given we don't know for sure how persistent President Trump will be. I believe next week or the week after, we're having the annual meetings in Washington, D.C., where all the finance ministers come together, and I suspect they're going to bring their best elevator pitch to President Trump, why their country should have some exemptions or their tariff rate should be lowered. So I just think there's a lot of uncertainty. I think, as we saw today in the news, China announced the 34% matching tariff, and then Trump just said, well, it's going to be permanent. I'm not going to back down. The question is, will he back down? Will he not? Will he negotiate? And there's just so many questions. And again, the uncertainty itself is what hurts right now, on top of the fact that these tariffs are like a negative supply shock.
Yeah, I think it's worth noting here that pretty much every asset class across the board, I guess with the exception of Bitcoin, I do see Bitcoin trading up about 1.3%, but even gold lower. We see bonds trading lower. Oil is lower. All of the international markets are lower as well, David. So it seems like there isn't necessarily any winner in a trade war. Would you agree?
Yeah, absolutely. And again, I don't want to push this too hard, but if this trade war persists over a long time, it has all the signs of a 1970s era stagflation environment being set. We have unstable inflation expectations, so they're primed to be turned on and to explode. We also have a Fed that could be politicized over the next year. Chairman Powell's time is up in 26. President Trump may want someone who's going to accommodate him, support him with rate cuts. So more rate cuts, and when we have higher inflation, might further destabilize inflation expectations. And then we have weaker growth from the tariffs themselves and the uncertainty. So there's almost a perfect storm brewing here that, if the trade war is left unchecked, could put us in very unfamiliar territory, and that we haven't been there since 1970s.
American consumers have already had some weakening confidence. Do you expect them to pull back their spending, David, in this environment?
Eventually, but maybe in the near term, they're going to step up because they see things are going to get more expensive. At least anecdotally, people I talk to, they're like, I'm going on Amazon, I'm buying that car, I'm buying that mower now while I can. But I think ultimately, yeah, it's going to have an effect on their incomes, on employment rates, all those things. It's great to see the good jobs report today, but looking forward, if things don't change, that's not going to last.
Yeah. We did see car sales rise last month for the month of March, up almost 5%, I think. As some of these purchases certainly were top of mind for consumers among tariffs. David Beckworth joining us remotely. He's a senior research fellow at the Mercatus Center at George Mason University. David, thank you.
Thank you.